Good morning, excuse me. Good morning, everybody. This is Mark. We're back here for the morning call. It's Tuesday. Fed watch obviously is tomorrow. In my opinion, we began to make that possibly, bid underneath this tape that started late afternoon. In high beta, it started probably mid-afternoon, and you obviously having some follow through this morning. It seems like, we're positioning ourselves at least to come back to where the indices are basically flat, unched, maybe up a little bit for the year. But I still believe, as I've been saying, the high beta stocks that we've been following, they seem like they're ready to make a move if that is the case after interest rates do come to fruition that they are going to be raised a quarter of a basis point. Let's take it to the charts and see. The spiders, again, we're gapped up. We're now in that gap. I would expect the gap to probably be filled. I don't think it is filled yet. So you probably have another leg, maybe another $1.50, maybe pre-Fed, and then you have to wait to see what the Fed happens. And that means, we'll have a day today, and it will be slow in the early morning. But I think Fed day could be a little manic, more manic than we've seen in a while. Amazon was the strongest yesterday, even in the morning, but it did have a pull-in. But yesterday afternoon, certainly, having another gap up of $6-7. I mean, you're talking it's $15 away from all-time highs. I don't know if it's going to get there, but my feeling was all along that it's going to get to the $700 level by year end. We'll have to wait and see if that comes to fruition. Overall, I'm not like mega bullish, but at the same time, I like the action I saw yesterday, and that goes with Google. Nice reversal of a touch of a 50-day. LinkedIn still waiting. I think that one actually can probably catch up in the next day or two. I've been in that probably in and out for the last day or two. Above 234, I think you have some room, probably to 240. So keep that on the radar. Facebook, still probably a little bit more time, 107.50-ish. Has some room. BABA, this is the area that yesterday was the area to get involved. 80-ish for a move back to 84. And then you have NFLX, just to add Netflix, nice bounce, up again today. I think still needs a little more time for digestion. And then Apple, which cannot get out of its own way. And to me, actually, had a nice rally yesterday, but down $1 today. For some reason, my gut says this one's going to be, either staying here or not in play, for a little while. So the technicals are sort of telling us that. So keep that in mind, and we'll go from there. So some news this morning, different news on stocks. You have, on the downside, you had MMN have some, bad, negative earnings and is down this morning. Then you have some positive news with a new announcement with a different drug chain. I think Walgreens for VRX over 100, 101. I think is interesting. It's obviously been basing for a while. I was actually hoping it wouldn't have gapped up because it was on my radar yesterday. ICPT, so some M&A news. It's up, when I came, it was up 15. Broken chart, but this can get it going very quickly if it really wants to. So it's on the radar, and then AMGN on some more biotech news, hanging in there, and up I think $2-3. And chart-wise, it looks pretty healthy. IBB we haven't looked at in a few days. It's still in the low end of the range. I'm assuming it's up a little bit this morning. It didn't see 340 is the top end, but probably 330 is more of the resistance at this point in time. So, we're in that mix of haves and have-nots in this tape. I believe the USOs are up a little bit this morning. Oil, but again, I think you might get violent bounces here and there, but I don't think they're going to last, at least for a period of time. So, I'm not overly excited about any of the oil stocks or oil services stocks. I just think, they do dictate some of the market. And I was talking about yesterday, HYG for high yield. And, it seems like the spiders were following this toe-to-toe, and obviously it had a pretty bad day. Yesterday a lot of it was, defaults coming, or, with Avenue, one of their high yield funds, or some trouble happening in the near future. So again, there is news out there. We'll have to see how it plays out. I think the scope is going to continue to be narrow. I do think the market, was yesterday at very oversold conditions. This morning will be a little less. You could get to that unch range, which means another day and a half. And you could have, I know one of the analysts, Jeff Salt on RBC, said he possibly of a rip your face off rally at the end of the year. I'm not ruling that out of the question, but again, I think the S&P stay roughly where they are, up 1 or 2%, or down 1 or 2%. I think the stocks we've been looking at, the high beta stocks, have been outperforming all year long. I think you got to stick with that plan. I think that's the only way to really capitalize. And then you're going to get, into the new year positioning, whether it's the dogs or the Dow, other ideas. Stuff that has underperformed might begin to, start showing some bids. That's normally how this market works. The stock loss, the selling, a lot of it probably has happened already, and a lot can happen over the last week and a half. And unfortunately, a lot can happen when most people are away, which is going to be the Christmas to New Year's time of year. Sometimes it's very manic, and sometimes it's very crazy. We'll have to wait and see if that's going to be the case this time of year. I know this market really has been unforgiving for people who take vacations at the normal period of time, i.e., the last week of the summer. That's when we had that flash crash reversal, not flash crash, but a crash reversal, and most people were on vacation. So we'll have to wait and see. Overall, I'm not overly bullish on this market, but I am more bullish on the high beta based on how it reacted yesterday. I still don't think you can react. I still don't think you could pay up too much for a lot of these prices, at least from a shorter time frame. You got to wait till the dailies start to really show their faces. But there's lots of intraday trades for us to really take advantage of. And I think for those that have been following the VTF, we've been on top of it. And I think the key is to be patient. Time and patience are the two key factors, I think, right now in this market that get a trader ahead. It's been a challenging year for sure, minus a few days or a few pockets of decent trading. But so be it. That's the life of a trader. And we will learn. We're all live to fight another day. So enjoy the day. Stay tuned to the radio, and I'll be back at the close. Have a good one.